Yo, today is going to be a quick video lesson for you guys on the 5-minute strategy. I'm going to teach you what I look for when I'm trading SPY. We're going to go over what I see, what I look for, and pattern recognition, when to buy, when to sell, everything, and how to find key levels. Alright bro, let's get into it. So this is the 5-minute chart on SPY. This is today, as you can see, Wednesday. So right here, let's go over this trade right here. We opened, we started dumping, 5-minute close right here. It was semi-bullish. I did enter off of this. And what did I see off of here? So our key level 440, 671, okay? Key levels are major resistance areas on the graph, okay? That's basically where we've rejected multiple times in the past. So as you can see, if we scroll back a little bit, right here, we've had a major rejection right here, but we did end up breaking through it. And then if we keep scrolling, right here, our PCP level, major rejection point. Today's PCP is really strong right here. That level we just talked about. Another rejection point. Major rejection point on the 5. Bounced up, bounced 3 times in one day. Right here, high of this day. Major rejection points are key levels, okay? So I did open up a Discord for the whole community. It is a free Discord, and it will be a paid Discord sometime in the future. Y'all could join if you want straight access to me. If you want to talk to me, DM me. If y'all want to understand the 5-minute strat a little bit better in detail, ask me any questions. There's an Ask Daryl section on the Discord where you could just ask and I'll answer. And don't forget, I am live every single day, 7 a.m. Pacific, 10 a.m. Eastern, all the way to market close. Be welcome to join the live, ask as many questions as you can, and join the Discord. We're slowly growing a nice community over here of good traders. You'll have complete access to everything. Alright, so this trade. When I got into this trade, what did I see? I saw semi-bullish candle, our first bullish candle of the day. Now I did enter off of this close. This was my stop loss. The wick went through our key level. My take profit was exactly at the high right here. Literally exactly at this red candle high. The reason why I use this strategy is the exact amount SPY retraces and then closes is the exact amount that my take profit is going to be. So this is the exact amount it retraced and closed. And then on the 1 minute, and yeah, when we look at that on the 1 minute, this is what it looks like right here. We took profit exactly at the top. Now my box strategy is the most consistent take profit system I have found with the strategy. Our next trade here, I did see a bullish candle off of this key level. I did enter and I took a loss on this one. It did stop me out, but I did re-enter it when I saw another bullish candle off of my key level 445.33. I entered in right here. My take profit was the exact amount I retraced from the close of the candle. So this amount, boom, that's the strat. Now that's what I did for the day. Now let's talk about what we look for in candles. Okay, this is a perfect example. This is a big bearish candle, okay? High of day retest, big long wick right here. This is a really good area to enter in for shorts, okay? So you would enter puts off of this candle because it is high of day retest and it is very bearish, and it is wicking through a key level. What does wicking through a key level mean? It means that this long little skinny dangly thing, it's going through our key levels, which we drew on the graph, okay? So we draw our take profit like this. So that's our stop loss. From candle close to our stop loss, we bring the box down, and that is our exact take profit. Pretty simple strategy, not too much to it. Now same thing with bullish candles. Now this is a bullish candle. As you can see, we have a longer lower wick, shorter top wick, bodies on top. Now these two are bullish candles, but they are at high of day, so they don't count as any candle. In my opinion, we want bullish candles right here. We got a low of day candle right here off of our old key levels. I entered off of here, took profits at the top here, as you can see. Boom. Now, what do you want to look for when looking for bullish candles? You want to look for long hammers like this. This is a nice hammer. This is a nice hammer. You literally just want to imagine a hammer in your brain and just look for that on the chart, right? So just a longer bottom wick than a upper wick. That's pretty much what you want to look for bullish candles. And for bearish candles, you want to look for longer upper wicks than lower wicks. So a bearish candle would be like this one right here. We have a very long top wick off of 2 key levels high of day. And then we got a nice drop right after. And then again, what's down here, a nice bullish candle. Longer bottom wick than upper wick, low of day. This is the first green candle out of this downtrend. Of course, you want calls off of that. That's just some things you want to look for. You also don't want to get longs mid-channel. That's just gambling. Don't do that. Let's say we're right here, okay, and you get a bullish confirmation right here. Even though looking in hindsight, yeah, it worked, you wouldn't want to enter off of that because number one, my rule is if it doesn't have a top wick, don't enter because it does not show support for buyers, okay? It doesn't show support for buyers, right? Bullish candles, you want support for buyers. If there's no top wick, there is no support for buyers. It's just a dumpy, right? So this is a dead candle, it doesn't count. But what do I mean by channel? High of day, low of day. This is literally the exact middle. If you don't understand that, then I don't know what to tell you, bro. Now on to my EMA lines. So my EMA lines are kind of like brick walls. So that's what I tend to look at them as. The 7 EMA is the most common EMA it retraces to. The 20 EMA is a nice one too. It wicks off of. The 50 and the 100 are brick walls. Once you break through that, I consider that a trend reversal or the trend switch. The 200 EMA is a major key level. We always touch the 200 EMA 80% of the time. We will touch the 200 EMA. Now on to how I'm finding key levels. My key levels, alright. Look for major rejection points, okay? Now let's look at our 450.36 level. We rejected right here once, twice, 3 times. Now you want to look on it, you want to look at it on the 5-minute chart, okay? The 5-minute chart, you want to look for where it wicks. It wicked here, it wicked here, up here, 451.03. It wicked here, it wicked here, it wicked down here at this gap level, even better. The gap level I have is 449.23. We have major resistance here because number one, we wicked it 2 times this one day and we did close at the low of this day, so major resistance there. As well as here, as soon as we dumped here, we had a major bear trap and we just skyrocketed and turned bullish. This is a very strong level. You want to look for reversal levels, to put it simply. But yeah, bro, listen, if y'all got any questions, let me know. I'll be happy to answer them. I just wanted to make this quick video explaining my strategy and explaining what I see when I trade SPY. Like right here, nice 2 rejections, 1, 2, a nice rejection here, 1, 2, rejection right here, little consolidation there, rejection here, rejection down here, boom, 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 boom. You just want to look for areas that it's consolidating and spiking off of very strongly right here. This 434.99 level is a very strong level. We did have a major bear trap right here. As soon as we fell, we bounced straight up and reversed the trend. Now that's the 5-minute strategy in a sum. And I do use the 1-minute chart as confluence when I am trading with the EMA lines. On the 1 minute, I do use the EMA 200 and the 7. The 7 is a nice retracing point. If we're above the 7 EMA on the 1 minute, I tend to not enter. I enter once we dip underneath it or we touch the 7 EMA. That's just better entries on my opinion. On the Discord, I listed all my key levels starting from all-time highs all the way down to 430. And I do update my key levels every single day. I update the PCP. I update if we have a new gap level. I update how SPY rejected from levels that day. Now when I look at my key levels, I do like to bias the 7-day levels, so the previous 7-day levels, because those are more accurate. But when we are at lows like this, you have to scroll back and look at history to map out your key levels. And if we do form new key levels, you want to draw them out. Right here, PCP is 446.20. So if we dip all the way down and spike back up, you want calls off of that level with a bearish candle. And if we spike all the way up tomorrow and we fall back down and hit PCP, which is 446.20, you want to buy calls with a bullish candle. If my live streams ever do cut out, I'm going straight to the Discord, joining voice chat, and continuing the trades with you guys over there. So make sure you're in the Discord. It's completely free. You're missing out if you don't. And that's it for today's video. Hope to see all of you in the Discord. Stay green, stay confident, and remember, patience always pays.